When trading, we have points, we have stop loss, we have profit target, which is take profit. We need to understand these points so that we actually understand the risk involved, because the points are here to assist you in understanding the most important part about trading, which is you need to understand the risk involved. So the rules of risk to reward ratio, they are here to govern the market and govern everyone who's actually following the rules, which is important to follow. So now, in many cases, some traders who are new, experienced traders, advanced traders, they are actually lost. They are actually facing these difficulties in not understanding the point. They are just actually happy to see the just putting price stop loss like this, putting a profit target like this, and once they are actually back testing whatever that they do, they are happy and then they jump into trading, not really understanding the parameters, the actual movement of what is happening. So now let me assist you in a much better way. When we are actually buying or selling, because you can see here we have a sell, which is what? A sell in AUD USD. All right. Now, on AUD USD, the rules of trading, they are quite simple and straightforward. And they are here to assist you in actually what? In actually making a better decision. So, if right now you are actually confused in understanding the points, I'm going to actually assist you in a much better way. Now, the points, remember the points, we have stop loss and take profit, okay, which is the profit target. And now I wanted to actually make a demonstration on you understanding the other parameters that are involved in actually you trading this asset. Because if you are actually not aware on what you're doing and who is involved and what's happening, then you are actually at the risk of losing everything. And if you're in the risk of losing everything, you need to actually what? You need to pay attention to what is actually happening. Now, I took an example here. I'm not sure if this is going to fit well to what is happening to you. Okay, let me just make a demonstration with this. Okay, now what we have over here, we have a free margin. As you can see here, everything is on the rate. Can you see? Everything is on the rate. All right. And I wanted to share with you, you can see balance here, it's $5.77, and which is account is in USD equity, it's actually 2.88 because it's minus from that one. And then margin is money needed, which is minus from the balance. Okay. And then now we are actually left with what's happening here on the free margin. Okay. All right. We understand that one, quite simple. Let's get back to the points. All right. Now, the point, remember we're trading value, we're trading performance of an asset. It needs to go up or go down, which is where you have to go with the buy or sell. Now, let's look at the points. The point here, we have what? We have 45 points. 45 points is equivalent to 0.35, which is using the 0.01 volume, which is the lot size. The lot size represents the units that we buy or sell in an asset. And if you go to symbol properties on your I wanted to share with you, but unfortunately, yes, I can share with you. It's here. I wanted to share with you. If you go on an asset and you tap on details, which you're using an iPhone MT5, and if you're using an Android MT5, you will go to symbol properties, and then on properties you will see what the contract size, which is what we are actually trading. And then if you go down, you will see what? You will see the minimum volume with the maximum volume. As you can see here, we have a minimum volume and we have a maximum volume. Now, that contract size and the minimum volume represent that 0.01 is equivalent to 1,000 units, because if you say 0.01 times 100k, which is the units, sorry, here I'm just making an example because it's currencies, and I know that AUD USD is actually 100k. There you saw on USD, on gold, you saw what? You saw a hundred contract size. And let's bring back this. You saw a 100 contract size here, which is quite simple. Now, when we're looking in terms of this, we understand that, okay, this is the lot size, which is right now, if we minus this price and this price, we get what? We get 0.000, and I think it's 45 at the end, which is the points, which is the difference from this price and this price here. The difference from this price and this price here. And our mission here is to understand the risk that we are taking. The risk that we are taking. All right, right now I'm taking a risk of 0.35. This 0.35, if we compare to other assets that we can trade, such as the volatility, trading the other indexes that we can think of trading. In this case, let me search for another asset that we actually can think of trading. You can see here we have a Euro USD, which is quite simple to see. Now, when you're looking in terms of risking to the other asset, okay, let's just make a comparison and quickly go back to the chart so that we can actually understand much better. We can see that here we have what? We have 45 points. Here we have 55 points. If we check here, we're risking 0.35. If we check here, we're risking 0.49 with 55 points. And if we check here on the profit, we have 21, which is profiting what? 0.16, 21. And here is profiting 0.52, which is 59 points. Now, the better way for you to actually have an understanding is that whenever you're trading, the graph will show you the performance of what is happening in a certain given time. Let's say right now you're using what? You're using an H1, which is 1 hour time frame. This 1 hour time frame will show you the movements that in an average, in a day, we move this certain pips or this certain points. Now, let's just check let's AUD USD here. Okay, you can see right now we have this big movement, okay, which is we're trading this asset in a session. We're trading this asset in a session. Okay, maybe you might say, Boza, you're taking forever. What's the point here? What is happening here? Okay, for me, I would like you to actually understand that there are better options for you to risk your money. There are better options for you to risk your money in this way. Let me demonstrate, make a big demonstration here, and looking in terms of what? Looking in terms of the first thing, which is the spread. Okay, you can see here on USD and US 100 we have 246 spread. On gold we have 25 spread. That's a lot of money that you will pay. All right, which is the difference. Is the difference where you buy or sell, because you can see here the difference price between where you buy or sell. So that will actually give you paying a lot of money. So it is better for you to what? To find an asset that is gonna give you more money than the money that you are risking. In this case, let's say right now you are risking what? You are risking a $10 to profit what? To profit $100. That is way better than any asset. Okay, because I find it very hard for traders who are actually losing such opportunity just for them to profit what? To profit 20, which is in this case they don't understand the points.